is not company's constraint, but management is considering to replace it with the new model B300. It means we will cancel the B100 and install B300. Because of potential saving in direct material of the new machine, the B100 would be sold. The change have no effect on production or sales other than some savings in direct material due to less wastage. The material gonna be saved, otherwise nothing gonna be change here. So let's just see that how in case 1 and case 2 the relevant and irrelevant stuff are changed. So here sales, when we are using both B100 and B300, so the sales are relevant. Why? Because these two are not the same, right? In both cases sale is not the same. In case 1, when both are used, sale is increase and company expand. In case 2, you remove the B100 and sale remain the same. So in that case, sales are not relevant, right? Direct material, relevant. In case 2, also relevant because it's a potential saving. Direct material also relevant because we are using 2 machines. So increase in machine also increase in direct materials. But direct labor is relevant here, but not relevant here. Why? Because all other things are constant, remain the same. So you see, everything is not relevant here. Variable cost, relevant here. Book value of B100, it is not relevant. Why? Because it is fixed. It is sunk cost, already incurred. Whether you buy in addition B300 or whether you replace it in, it is sunk cost. The purchase cost is sunk cost. Similarly, the disposal value, it is not relevant in part 1 because you are using that machine in addition to B300. But in case 2 is relevant. Why? Because you are selling it and replacing with B300. So proceed that you receive from selling it will be will be avoidable. So it's a relevant. Market value of B300 it's relevant in both cases because you still are in decision making. You didn't purchase that one and it is not already incurred, right? You will incur this cost. So you can save this cost by not purchasing B300. Fixed manufacturing overhead, it is not relevant in case 1 and it is also not relevant in case 2 because all remain the same. Only thing is that the variable fixed general expenses, they will be changed. So these 3 are relevant, but here these are not relevant. Why? Because all other things are remain the same. Only you replace B100 with B300, right? So you can compare your answer, and if you still have question, you can write us in our WeChat group. And those who are here, if you still have any question, you can ask right now. Coco, any question?
No, it's okay, sir.
Good. Okay.
You just made 1 or 2 mistakes. It's all right.
Okay. So now good. You understand?
Yes.
Now, our second learning objective is prepare an analysis showing whether a product line or other business segment should be dropped or retained. Here we go. So that is the most use of relevant costing. So one of the most important decisions managers make is whether to...
Sir, I don't know if it's me, but I can't see the PPT right now. I'm still on the exercise page. Okay. I don't know if it's my connection or not. So.
Now, can you see that?
No, it might be my connection.
Subhan, can you see the PPT?
Ali said he can't see it as well.
Okay, let me stop share and share it again. Now, can you see that?
It's loading.
Ali, can you see that? Okay. Again, no.
So for me, it's still like loading. Also.
Okay. Let me. Now, can you see?
Still loading. Okay, now it's okay.
So which PPT you are seeing that? Adding or dropping segment?
Yeah.
Okay, Ali, can you see that? Ali, I'm waiting your reply. No, I cannot hear you, Ali.
He say he can't see it.
Again, he cannot
But
see.
I think it's a connection problem.
Okay, wait a second. Let me. Oh, he just mentioned he can see. Okay. Now, can you see that? Learning objective 2. Can you see?
The breakout room, yes.
Not the breakout room.
I can see the PPT also, the adding dropping segments.
Okay, okay. Now, it's not adding dropping segment. It is learning objective 2.
No, I'm still on the old. Although now the connection is good, so.
Okay, wait a second. Let me pause the recording here. Okay, class, we just resume our recording and fix the issue. So let's just go back to our second learning objective, which is prepare an analysis showing whether a product line or other business segment should be dropped or retained. So we told that it is the most common use of relevant costing in making this kind of decisions by the manager. So adding or dropping segment, which is, so ultimately the decision to drop an old segment or add a new one is going to hinge primarily on the impact of decision will have on net operating income. So what is the tagline here? If by dropping the segment, or already we are making some product, we are dropping it, if our net operating income is increased, then it's a good decision. Do that. If by dropping the product or a segment, if it decreases our net operating income, then even if that product is giving us a loss, do continue that. We'll see that here. So we will see an example here, and that is due to declining popularity of digital watches, Lowell companies digital watch line has not reported a profit for several years. Lowell is considering discontinuing these product lines. What is the decision rule? Decision rule is based on Lowell should drop the digital watch segment only if its profit would increase. If by dropping this watch segment, company's overall profitability improved, then they drop this segment. Otherwise, they will keep that even though this watch segment is giving them loss. So Lowell will compare the contribution margin that would be lost to the cost that would be avoided if the line was to be dropped. So let's look at their financials. So you see their sales less all the variable expenses, right? So these are their complete variable expenses. Their contribution margin is 300,000. If they less their fixed expenses, these are 400,000, right? So you see the digital watch segment is now giving the company 100,000 loss, right? Let's see that. So the investigation has revealed that the fixed general factory overhead and fixed general administrative expense will not be affected by dropping the digital watch line. It means general factory expenses and administrative expenses remain the same. The fixed general factory overhead and general administrative expenses of this product would be reallocated to other product. It means its fixed expenses going to be spread to other segment of the Lowell company, right? Let's see that. So the equipment used in digital watch has no resale value. If they want to sell it, it will be sold on zero market value. Now let's see that. Should Lowell retain or drop the digital watch segment? So look at the differential costs. So all remain the same. So wait a second. Wait a second. If their rule was, if the by dropping the digital watch, if the contribution margin improved, if the net income improved, then we will drop it, otherwise we will retain it. So if we have the analysis, we find out that the salary, admin expenses, general expenses, rent expenses will remain the same, right? They will remain the same, right? So their saving would be 260,000 and their contribution loss would be, contribution margin that will be lost would be 300,000. If you see from here, from this investigation that we just talked about here, that the general factory administration overhead will remain the same. Admin expenses, which means salary of the line manager, remain the same. And wait a second, which one is that? Fixed general expenses and fixed administrative expenses will remain the same, will be reallocated. Here we go. So you see, by dropping this watch segment, we will lose this income contribution margin. So this is income. So that's why many students are confused why this is a negative sign here. Why there is a negative sign here? It because if we are dropping it, then we are losing, right? We are losing this contribution margin. So that's why this is a negative sign here. So what we are gaining, all this, the factory rent is remain the same, right?